What up? What up? What's Gucci gang? It's good, Willow. Lewis Smith, Nicholas, Sniper Hicks, Naruto. Allie's here today as well. Look at that. The numbers aren't showing up though. We got more people in here than what it's telling me. Lies. Lies. But it's cool. It's cool. We're not worried about it. Opening up the chat today to subs. I know Friday and Wednesday last week we did membership only chat. Still public stream, but membership only chat. Today I made it subscribers. You know, because I get not everybody's a member. It's cool. I ain't mad at you. But you know, I went not on a rant, but you know, I talked a lot on Instagram today about, you know, the banking sector, and I was kind of shitting on break of structure a little bit, which I will discuss with you here. That'll be the topic for today. Different ways of entering the market, you know what I mean? And just the various just the vastness of possibilities that the markets provide, you know what I mean? So if you guys understand, drop a like on the video. Let me know that you can hear me as well. Quick sound check before we get into it. I would greatly appreciate that. And the likes help us get on the algorithm as well, to get hopefully more people on here. You know what I mean? We got to lean with it in order to rock with it. You know what I'm saying? That's what I should just speak in parables from now on. I think you guys would probably enjoy that. Probably not. You'd probably be like, come on, man. Yeah, come on. I was watching Ryan Holiday's YouTube the other day, yesterday, I think. And dude, one comment was so fucking hilarious. It was the funniest shit ever. You know what? I should have screenshotted it so I could read it to you. I died. It was a comment about like some book. So, man, I gotta go back and find that. I'll try and find that for you later, so we can go over that probably tomorrow. It was so, I'm telling you, I died. It was that funny. All right, thanks guys for the sound check. Haven't heard that song since high school. Yeah, what's good, Sergio? Oh, I haven't either. I'd play music here, but then YouTube would copyright. So, you know, YouTube and their fucking bullshit. All right, so let me talk about one or two things, and then we'll get into the price action. Ooh, I should have put my phone on the charger as well, but I did not. It is what it is. So anyway, let's talk about S&P. So I took a break even on S&P today, and we ended up getting the high that I wanted, but not without coming back to break me even first. So that's kind of a bitch, but it's cool. So we'll discuss it. So the idea on the higher time frame is that the Dow is bullish. Okay, so I publicly said that. It's on my Twitter. You know, there was only like one or two tweets today. Let me see if we pull it up real quick. Give me 1 second here. Appreciate the share, Willow, as well on Twitter. Thank you. All right, so it was 3 hours ago. It was at 8:28, so just before the market opened. It was like right in here, actually. Matter of fact, let's put this shit on the chart. Copy link. Wham bam, thank you, ma'am. Look at, get the fuck out of here. Look at that shit. Look at that. Get the fuck out of here. Now I know we're looking at S&P. I know. Some people might not get that. John, you're tweeting about the Dow, but you're showing the S&P. What the fuck? Right. Well, you know, if I'm bullish on the Dow, and the S&P presents an opportunity, if they're both correlated, come on, don't be a fucking bonehead. You can put that in your notes too if you want. Don't be a fucking bonehead, okay? So bullish on indices either way. Now, I'm not buying down here, okay? I'm not trying to, you know, say that I called the low. I didn't. I'm just saying before the market opened, okay, because we open in 2 minutes, the stock exchange at least. I'm like, okay, I want to be bullish, okay? Higher time frame. Allie knows Dow Jones triple highs on a daily. Okay, great. So we may want to end up trading in that direction. Okay, cool. So we're going to take this off because we need the whole fucking chart now. But so we rally, retracement, rally. Now this rally was a little bit concerning for me personally because we ended up taking like a short-term high. But there is a higher high that you see here on your chart, 41.98 and a quarter. So all you got to do there, simple, is just zoom out. So you can obviously see that that level is the high from the 18th, Tuesday, April 18th. So when we start to hover around these highs or lows, then usually if we hover near liquidity, then usually we're gonna get in there, you know what I mean? So it's like, okay, on the way there, you know, can we find an entry opportunity? So there was a model I taught last week somewhere else now, and this is kind of what I wanted to discuss with you guys here. Okay, now I came out and I basically said, look, you don't need a break of structure. I've said that for a long time. My students can say that, you know, I've been saying that in the recordings for years. Okay, you don't always need a break of structure. It's not required. Okay, now the excuse me, there was a model I taught last week around mitigation, you know, what to look for, when to look for it, and also other variations. So interchangeable parts, kind of like Hot Wheels, you know, like a Hot Wheels track. You know how all the tracks have parts that are interchangeable. You can make the track longer, you can make it shorter, you know, and that's your own unique model. So that's how trading is as well. There's a ton of different ways to enter the market. There's a ton of different ways to manage a trade. Money management, risk management, you know, all of that stuff has to deal with a trade plan and a trade model. So the thing is, when we talk about order flow, okay, order flow usually has a starting point and an end point, right? So like take this for example, literally today's example, take this. Here's your low and here's your intraday high. Okay, so in between the low and the high, we should find order flow. Okay, imbalances being respected, potential mitigations being respected, you know, up to the areas of liquidity. Okay, and if you've never studied this before, dude, you're missing out. Okay, you're missing out. I know we don't have too many people on here. It's Monday and it's noon. I get that, but dude, you want to fucking elevate your trading, or at least your understanding about price action, then you need to really pay attention here for just a minute. Okay, so this here, okay, and you know what, I'll even label it for you guys. I'll even label it for, because I don't label it because I know what I'm looking at, know what I'm looking for when I'm fucking zoned in, like I know. But for you guys, I'll do that, you know, just to prove a point. Okay, so the 5 and the 1, that just represents the time frame, nothing more, nothing less. There's no secret, you know, nothing. It's just, this is a 5-minute imbalance, this is a 1-minute imbalance. Okay, so part of the because I'm not going to reteach the model here on YouTube, you're just not going to get that. But part of the model is you can enter at a specific, you know, price point, logical price point, or you can wait for another reaction, drop down to a small time frame and enter there. Okay, so this is what I'm saying. All right, and this is the trade that I took today. So if you study this as an example, okay, if you look at price, you have the initial imbalance here from the news. That's tradable. Price comes back into it. I didn't trade that, but you could. That could be a second entry opportunity. The market rallies higher, drops down. This was my opportunity there. I didn't buy the low. I didn't buy this morning's low when I was fucking bullish. I didn't buy that first retracement either, but I did get in on this one here. So notice that response though. Is that a bad entry? Is that, you know, chasing price? Look at it. Fucking wicked it. It spends a little bit of time near the entry and then bam, runs for a new high. Now, personally, I thought it was going to come up here. I wanted it to come up here. I was looking for 42, like 42.03. We didn't get that. So I ended up breaking even on the way back down. I'm like, okay, that's fucked, but whatever. Then I see we create equal lows. And I'm like, okay, well, now I'm definitely not longing. What's good, Mr. John? I'm like, well, I'm definitely not longing now because now we have equal lows. And that's one of the rules. I'm not going to long with equal lows. So I let it go. And actually, matter of fact, let's pause here for a second. I actually said, we've got equal lows and the market's rallying. I'm like, okay, you know what? I'm going to take the morning. I'm going to go outside. Oh my God, guys, look, today's a beautiful day outside. It was like 70s creeping up to the 80s, but like it was still kind of cold from the morning. Oh my God. So all I could hear was like ducks and birds, and it was fucking beautiful. The lake outside has a fountain as well. That fountain is usually on, so there's usually like that sound of, you know, the fountain. That was off today for whatever reason. I don't know why they do that, but it was just off. So today was like, that's all you could hear was nature, and I'm like, this is awesome. So I went outside to read. I almost finished the book I'm reading right now, The Socrates Express by Eric Weiner. So it was awesome. So that was my morning. But anyway, back to what I was saying. So then price goes to the target that I wanted to. It actually stopped short. It didn't get to 42.03, but I still would have taken partials in here. So that's it's unfortunate, but it's fine. Market comes down for the equal lows, right? But this is what I'm saying. These like retracements in here are opportunities, is what I'm saying. Now, today, personally, with these equal lows, I wouldn't take this. Okay, I wouldn't take that. But I'm saying there are multiple opportunities to trade, right? I mean, just look at the chart. That's a low, that's a low, that's a low. That's equal lows. I wouldn't say that is an opportunity, but it technically is. And then that's a low as well. So you could have entered down in here, either one of those, or this one, right? So think about that. This right here today presented at a minimum like 5 entries, and plus the one I took was like 6. So that's like 6 different entries you could have taken. Not even mentioning shorts. You know what I'm saying? So do you always need to break a structure? No. Do you always need an imbalance? I prefer them, but they're not 100% necessary. So that's what I was talking about earlier. Like, I'm not trying to just shit on break of structure, but the problem is when people try to force 1 or 2 ways of trading the market onto everyone else, and I don't believe in that. There's a bunch of different ways to do this shit, and I've shown you each one of them. Otherwise, I would have flopped. That Wells Fargo idea would have fucking flopped, but it didn't. It didn't. Okay? Oh, we're kind of pulling back today. That's a little sad. We were at 41, now we're at 40 and a half. That's kind of sad, but it's cool. We're trying to swing this bitch anyway, but you know, this low right here, March 24th, that low right there, that was the one and only day that it was below the low of 36.54. I said I would buy that if it went below that low like a week or 2 prior to that. That was our low for this year. Below last year's low. That's an opportunity. Or what I usually like to do is wait for that first retracement, that first reaction away. Look at this. March 24th, we made that fucking low. We rallied. Oh, but look at this. We didn't break structure. No break of structure, it comes back into that imbalance. And I fucking screenshotted that. I showed my friends. I gotta find that image somewhere. I take screenshots every day, but I took one right there on the fucking daily, right there on April 4th. And I said, watch this imbalance, see if that holds. And we run and we run and we run, bro. No break of structure. You do not see a break of structure here. These highs look like dog shit anyway. There's nothing right there. That's not a break of structure, but yet you see price fucking rally. I don't just say things. John says you don't need break of structure. Right, but I proved it to you before all this even happened. Like, come on, bro. Come on. There's no other way to teach. I can always, go back and say, well, look what happened here or look what happened there. No, bro. I've been saying you don't need break of structure. Been saying that. And this right here also proves it. JP Morgan, what I say about JP Morgan? That they were going to accumulate at this low or below the low and at that low. And that we would run for what? 145. Earnings shot us up there. I said, you know what? I'd rather see us come into that gap and then run. Guess what we did? A few days later, came back into that gap. I fucking tweeted that one too. Bam. Now we're higher again, bro. You don't need a break structure, dog. You don't need a break structure. Okay? This shit was hidden too. Watch this. Watch this. I got 5 likes on it. Watch this. Now it was in the evening time, 9:57 or 9:46, sorry. 9:46, that was in the PM. Right. But I was saying that at our earnings, I'd rather see us come into that gap and then go. We didn't get there until like 2 weeks later. My timing's not the greatest. I'll give you that. It's not. I can't tell you, oh, it'll be fucking Thursday of 2 weeks from now. I can't fucking do that. I wish, but I can't. It'll get there when it gets there. You know what I mean? And look what we did today. Oh, we gapped higher. No surprise there. No surprise there. What's JP Morgan doing? They fucking scooped up PNC, or not PNC, whatever that other dog shit bank is, right? Scooped them up. And now they're up 2.4%. You know what the options are up today? The options are up like 200, 300%. They were trading at like $56 on Friday. Now they're trading for over $240 on one of the contracts. I posted on my Instagram. 200, 250%. Handed to you. Fucking handed to you. Free. Free. On my Twitter. Free. I got 5 likes on it. Just 5. Come on, bro. People don't pay attention to the value of free. They don't. And one day I'm going to stop posting on social media. I'm going to stop posting trade ideas. And I'm just going to post it for members only. For people who actually want to pay attention. That's all I'm saying. Now, Wells Fargo's only up. They're only up 2% today. So, it's not the greatest day in the world for Wells Fargo. But they're still, I think, they're the third largest bank still. So I don't bank with them. I think they're shit, but whatever. The only thing that I have on here is just another imbalance on the weekly. So I do want to see us trade higher, but obviously the better play is JP Morgan. So it's cool. But it makes sense. Not just from the price action, but just from, JP Morgan, they're the number one bank by far. So, they have, Google it. Google how much deposits they have versus everyone else. It's disgusting. They're huge. It doesn't even make sense. Like, literally doesn't even make sense. So, you think shit like this? You think banks play by the rules, bro? You think you become the number one biggest bank in the US or in the fucking world from playing by the rules? Come on. They're the ones who I proved to you guys in my old videos, even in my best-selling book. They're the ones manipulating price. And sure enough, Google it. Ex-JP Morgan traders spoofing gold and silver, dude. It's there. The paperwork is there. The fucking convictions are there, bro. It's all there. It's in the price. It's in IRL. It's all there. Literally. But anyway, if ES today's the strongest, I don't believe it is. I mean, you might be right, but I don't think it is. I think Dow was our leader this morning. I think it was Dow. I'm pretty sure. I could be wrong. Yeah. Dow is higher here at 1020, 1025. Whereas S&P was running those lows. I mean, they all still ran higher, but why NASDAQ is trading higher now? I don't know. It's a good question. I couldn't tell you. Look, it's not like just because one is the leader in the morning doesn't mean it's going to be the leader in the afternoon too. You can always have reversals because it could be, I mean, look how many lows the NASDAQ made. Lower low, lower low, lower low, lower low, lower low. I mean, come on, it kept doing it. And then it finally rallies. So, it could be the laggard in the morning and then be the leader in the afternoon. It depends on what the market does and what's going on. I don't always have a way of telling you beforehand which one is going to switch to what. Like, oh, we're leading now, but then we're gonna lag here. Like, I can't do that. I've done it before, or I've said look for a divergence here, but not like that specific. I usually wait for price action and go from there. But either way, here's the Dow. This is what I was trying to tell my students to look at earlier. I told them to look at the Dow in the 5-minute and reference the model that I gave them on Thursday last week. And so right here, you see a low, high, lower low. 825 or 828 is when I tweeted again that I was bullish on the Dow Jones. We rally. We don't get up to a 34,300 or 299. We don't get that. Then we come down into this mitigation. Okay. So think about that for a minute. Think about that. I'm going to put the tweet back up here because now I have to prove a point to you. It's not to show off. All right. Maybe it is, but it's still to prove a point, right? How do you build confidence? How do you build confidence? Okay. So there it is. 828. That was during that candle. Okay. And look, obviously if you don't follow me on Twitter, you could easily go, well, yeah, John, but you could tweet that you're bearish and then you could tweet that you're bullish and then you could just post whichever one works. I mean, you probably could do that, but I only have one Twitter account of John Fibonacci. Okay. No I's. Well, there's 2 I's, but I mean like no ones or underscores or anything like that. And there's no deleted tweets. There's no fucking deleted tweets. There was one price, 34,400 for the ETF, which we haven't hit yet. But that's the only other post was 22 hours ago. That was the only post from this morning. Actually, that's the most recent post as well. That's it. Just one post. One direction, one particular asset. That's it. No, well, it could go down here, it could go up there. Fuck that. One direction, one asset. And then it goes there, right? It goes higher, but we don't chase. Retracement down into the model I gave my students last Thursday, and then it instantly runs higher. Retraces, doesn't hit that low, continues higher. So guess what? You would have been longing near the low of the day, the current low of the day. The low of the day is down here, but this is the lowest low post low of the day creation. Oh, Andreas took that trade today. That's awesome, man. That's awesome. I fucked around and bought the wrong one. I bought the wrong one. Damn it. So, I mean, I wanted Dow, but I just thought the S&P was cleaner, personally, coming off of that imbalance. I mean, this still offered like 5, almost 6. No, it did offer like 6 points, but unfortunately it just came back to get me out and then ran. And that's okay. That's okay. I take losses. I take break evens too, and I'd rather have a break even than a loss any fucking day. So it is what it is, man. I made that mistake. I didn't buy the leader. I'm not perfect. So, you know, if you want me to come on here and act like that, I can, but that would be fake. So it is what it is, man. That's a good trade you took, though. That's even better that you didn't see the tweet, that you still took it. If anything, that's better. That's better. I don't want people to rely on, you know, what I have to say on Twitter or what I say on my Instagram. I just do that for free. Because if you back tested all of the ideas that I've had, the strike rate is high. Fucking high. You know what I mean? So my goal with that was to at least put traders on the right side of the market. You know what I mean? So you could flap the entry, but if your stop was not too tight and you still got the direction right, then you were still on side. Okay? You know, maybe you bought a retracement, took some drawdown, but it still went your way. Like I try to help put traders on the right side of the market. It's not financial advice. It's not trade advice, but you know, there are a few people out there that are giving their ideas. They're bullish or they're bearish, and they hit more times than they don't. And I'll tell you right now, if I was brand new, okay, if I was brand new to trading, or maybe within my first year or two, and I found a couple of people on Twitter that were doing that, like, man, this guy's hitting all the time. Man, he's wrong here and there, but he's hitting fucking 80% or more. I would follow them. And I would try to figure out, like, okay, well, you know, trader XYZ said he's bullish. Well, what does he see that I don't see? You know, or why did he say 34,400? And I'd go, all right, well, 34,400, you know, what the fuck? That's like way up here. Well, what's way up there? I don't know. Let's look at a 1 hour. Well, shit, ain't nothing on a 1 hour. Let's go look at a daily. And I'd go, oh, that's what's up there. Triple highs. Oh my God. You know, it's like this guy did the research for me. And now I get to benefit from his analysis. Oh, shit, okay. Well, if he's bullish, maybe I shouldn't short then. Market goes up. Like, bruh. I don't even know why I do this shit. Honestly. I mean, if nobody pays attention, why even do it? You know what I mean? Why even do it? What are your comments about preferences on waiting how the news affects price before making any decisions? Well, I think that's fine. I also I also think, you know, which news is it? Like manufacturing PMI from this morning? I mean, that's not really all that big of a deal to me. I mean, it caused a little bit of volatility, but we got more volatility on this higher move than we did from the news. So, you know, not really a big deal. But like cash rate, that's going to be probably a big deal tonight for Australian dollar. Unemployment rate for New Zealand tomorrow, that's probably going to be, you know, that would be something that I would wait for. Now, if we had equal highs or equal lows prior to that, there's a chance that I might take a really small trade to see if we can get those highs or lows during the news, but I don't usually recommend doing that. The risk reward is dog shit. The chance for slippage is dog shit. I mean, everything about it is dog shit, other than the probabilities that we would run the equal highs or equal lows. FOMC on Wednesday, federal funds rate on Wednesday, and then we have unemployment rate on Friday, both of those for the dollar. Unemployment claims on Thursday as well. So yeah, it's a pretty news heavy week. So if you guys haven't looked at that yet, you definitely should. Okay, now this is Central Time. This hasn't updated since 9 this morning. Okay, so it says 12:30 up here. It's 12:30 for me too. So that's what I'm telling you. And this is all the news for this week. So again, cash rate, if you're trading anything with Australian dollar in it, New Zealand tomorrow. And then Wednesday and Friday are going to probably be some volatility for the indices and the dollar index. And probably the metals as well. Okay. But yeah, I would probably wait for the news, and then if something sets up, you know, that could possibly be tradable, but I would lean on the side of not doing anything if it was me. Oh shit. Okay. So pay attention here. Now that we're in the afternoon, we do have a higher NASDAQ, and this high looks like this is horrendous, but we do have a higher NASDAQ with a lower S&P and a lower Dow as well. So that's very, very interesting. Just keep that in mind. Now, if I'm going to take this off too. If we had like equal lows on the Dow, then I would say that's easily a downside target. But that's not the case. The S&P had lows already been swept, so I wouldn't necessarily want to be bearish on that either. As far as the NASDAQ goes, dude, look at our formation today. Look at our formation today. Look what we have. Higher highs and lower lows. Okay, that's... ugh. All right. Probably don't want to trade that. It's hard to tell. And personally, I don't care for when the market does this. It's like a... ugh. I'd rather stay away from the NASDAQ. The S&P took a high time frame area of liquidity already. So if we don't have a downside target, if we just took upside liquidity, then to me, it's hard to say. It's hard to say. Was good, Badu? But yeah. So if anything, I wanted to make that a point earlier today about, you know, break of structure and about different ways of entering the market. Okay, you don't have to have that. Matter of fact, let's go to the NASDAQ here for a minute as well. Okay, I took this last week too. I took this right here. Okay. Now, we never got to the lows down here, so I did take partials on the way down. Or, excuse me, well, it was on the way down, but it was on the way up. Actually, I took partials, and then I broke even on the rest. But this was the target. Okay? So, this retracement here, what break of structure? What break of structure do you see on that? I mean, maybe a 1 minute, possibly. Let me take a look. I mean, I guess. I mean, you could probably consider that a 1 minute break of structure. But that's kind of like, that's hidden on the 5 minute. You see no 5 minute break of structure, yet I was shorting that. And that imbalance was respected, and it took a dump lower. Again, no break of structure required. Why? Because the NASDAQ failed to get above Thursday's high when the other indices were. It was weakness. Now, that was very short-lived because then it turned around. But at that time, like, that's still tradable. You know what I mean? So, but there's nothing wrong with break of structure. It's just some people act like that's the only way to trade, and that is a limited view of the marketplace. Very, very limited view. And that's what you don't want to do, is limit yourself. You don't want to limit yourself to the possibilities. You know what I'm saying? Let me just check the daily real quick. Oh, no. That was that high. Okay. The triple highs seen on the ETFs are not the same for the futures. So, you know, I don't know what to say about that, but I guess the equivalent would be the high of February 14th. which is still 500 points away. But I don't know. We still took a daily time frame liquidity here, and then we're back into this range. So again, as I mentioned a little bit earlier, probabilities have fallen off for me personally. But if you had a mitigation, if you had the mitigation here, you had one opportunity to take partials at a new high, retracement, another new high, second opportunity, extreme retracement. If it was me, that I probably would have broke even on. However, if you had actually went break even and not like into the direction, then there was a chance that if you stayed in this, there was a third opportunity to take partials. So if I was in from down here still right now, I would be a little concerned. I'd be a little bit concerned about like it coming back to the entry. So, you know, look, I don't know if Andreas is still here. Your trade is your trade, but you know, if it was me, if I was still in, I probably would have got out majority at this new high. If I didn't get knocked out here, again, I probably would have, but if I didn't, I probably would have got out the majority here. And I would be concerned about where we are right now. Because I'm trying to justify a long here and I can't. Like I can't justify going long here. So if we've taken liquidity a few times, if we seek opposing liquidity, that this low is going to be on the table. And that low is very close to that trade opportunity from earlier. So, oh, you got out at the second high. Damn. Look at that. Very good. Very good trade. So, I mean, that's really about it. I mean, I just wanted to expand on that idea from earlier today. Okay, so yeah, the other indices are higher. So S&P higher, Dow higher. The NASDAQ failed to get above, what the fuck? Today's Monday. To get above whatever this high is prior to London. So we're not above that. So it all in all, it's fucking hard to say. It really is. It is hard to say. Let's take a look at the dollar as well. So here's something that you don't really, or that I don't really care for to see. You see how the dollar's been rallying? Well, the indices rallied too. You know what I mean? So when people tell me like, oh, the dollar's inverse of indices or whatever. Okay, well, if that was the case, then why the fuck did they go higher together? If they're supposed to be an inverse, then you tell me why they all four of them went higher. All three of the indices and dollar went higher. So explain that one. Explain that, please. You know what I mean? That's why I comment so much on Twitter, like when people give advice. Just take your trade and walk away. Fuck no. The market's wrong. Fuck no. Market's always right. It's you're the one who's wrong. Dude, I posted that the other day. I'm like, here's some dog shit advice for you. And I posted like 4 things. Yeah, 2 pip risk. 1 to 50 RR, bro. Yeah, 2 pip. Your fucking spread is 3 pips. So you tell me how the fuck you're gonna have a 2 pip stop loss with a 3 pip spread. Get out of here, bro. You course pusher. Get out of here. $1 to 50 RR, man. Buy my course. Buy your course. How about you call better trades than I can, and then I'll buy your course. I'll do that. You call better trades than me, I'll buy your fucking course. So we'll see if that ever happens. Fingers crossed. You know what I'm saying? Fingers crossed. But, you know, people are just funny, man. People are just funny. But anyways, that's really about it. I just want to make sure I got all that out there. So I'll wrap it up with this. The idea, at least. Break of structure, I think, is good. I think it's good. But is it the only way to trade? Absolutely not. If there's anything that I wanted you to get from today's message, it's that. Okay? They are good. You can't have a mitigation without one. But there are still other ways of entering the market. Okay? Matter of fact, let me see. Let me see. There was one thing I saw the other day, and it was really good. Fuck it. I'll have to find it another time. I don't feel like looking for it right now. But yeah, the mitigation model I showed last week, and then there is a slightly different one, the Y slime model, the your stop loss is my entry model. That one is buying below an old low or shorting above a new high, but there is more specifics that goes into it. You don't just pick a random high and go, oh yeah, I'll short that. I'll short this new high. There is some requirements to that. There are some requirements to that. Because, you know, I think days like today, the model works pretty well. Like if you bought below that low, but, you know, there are other requirements. What are those requirements, John? We're waiting for you to tell us. Oh, I have told you before. You just weren't paying attention. And I'm not going to tell you again here. So, best of luck to you. I'm just kidding. I'll fucking tell you. All right. This to me is a very shitty example, but it's still a good example. Okay. Your stop loss is my entry idea. Why slime? Okay. The idea is you want to buy below an old low. Okay. But I'll tell you not the secret, but I'll tell you what makes it actually work. Okay. So we saw equal lows here, and those equal lows together made low resistant lows on the 5-minute. Okay. But to me, in my opinion, what makes this an entry here? Well, number one, I didn't think it was an entry because we've already, you know, traded higher to the level I wanted. So I wasn't expecting higher pricing, even though we got that. But let's just say that we were, for example's sake, okay? If you happen to be bullish on a higher time frame, that's fine. The reason, to me, that you would buy below this low, okay? So if you're taking notes, here's the juice for you. There has to be what I call, okay, smart money efficiency. Okay? Smart money efficiency. You've all heard the term kill two birds with one stone, right? You know, it's being efficient. It's like driving to work and listening to a podcast, right? You're going to work, but you're listening to music or a podcast, right? So you're multitasking, right? It's efficient. So smart money efficiency is just a fancy term for confluence, okay? So what is the confluence at this low? What makes this low a buying opportunity is the only thing that's over here to the left, besides like a potential mitigation here, is the fact that you have an imbalance here, okay? So that to me is what constitutes smart money efficiency. What is price doing here? It just like Ali said, it's taking traders out, but it's also getting them in too. So traders who are long already have their stops here. Traders who are bearish have sell stops here. So it depends on how you look at it, because it's both. So it could be stopping out traders, or it could be getting traders in. But it's also rebalancing price at the same time. That's what makes this efficient. I mean, look at it. I mean, I didn't print this today. I don't print candles. I don't print these at all. But look what it printed here. It wicks into that. That's an intraday low. So think about that. If you were a beginner, or if you were a person that was brand new to trading and you heard that term, buy low, sell high, right? How do you know what low is low? Like, how do you know to buy low? There it is. Liquidity here, imbalance below that, bam. Look how powerful that is. Look how powerful that is. I don't have to convince you. Look at the fucking chart. Look at the chart. The chart tells you how convincing that is. I don't need to convince you shit. But that's a model by itself. Okay, now there's a lot more that goes into it. But at a very basic level, it's an imbalance below an old low, or an imbalance above like an old high. It would just be the inverse. Like if we inverted this, that's what it would look like. There would be a high, market's bearish, it rallies up to get buyers in, rebalances price, and then dumps lower. That would be the inverse. Okay? But that looks weird with the colors inverted too. So we're not going to leave it like that, but I'm just saying. So that in itself is a trading model. But, you know, you've got mitigations. You've got the Y slime, model as well. And there's other models too, but, you know. Now let's just say, here, I'll make the argument. All right. We'll practice some philosophy here, even though this is generally one-sided conversation. Think about this. A lot of people are scared to buy that new low. Right? I get it. Sometimes I am too. I look at that and I go, dude, that is bearish. You know what I mean? Because I'm like, oh my God. You know, we dropped 15 points or something. I don't know what this is. Yeah, just about. Right? The market's down 15 points. Man, we're below equal lows. You know, I don't know, man. I don't know if I trust that. You don't have to. You can wait for a reaction, though. Oh, it wicks into that and trades higher. Oh, okay. Well, maybe we can go down into a smaller time frame. Okay, so you didn't buy this. That's okay. I don't knock you for that. Because guess what? I don't try to do that anymore either. I used to do that a lot, but when you get it wrong, it's not good. Okay? So what do I do now? I wait for a reaction. Do you get a reaction? You get one right here. Oh, but wait a minute, John. But wait a minute. It doesn't fucking break structure, though. It doesn't break structure. Well, I've said it 100 times, and I'll tell you again. You do not need a break of structure. You do not need a break of structure, okay? Price reacts, though. Okay. If the liquidity's been taken, if we've rebalanced price, if we're still in a bullish market, down candles should be respected, right? Huh. Well, do you get one? Yeah. Well, damn. John, 1140. Well, I missed that too. I was on the toilet. All right. We leave that. Do we leave behind an imbalance? Yeah. We got that too. Price comes back into that as well. So coming back to what I was talking about earlier, how many opportunities are there to enter a market? Well, you got the run-on stops there. That was a little bit early, though, given that this is hindsight. But there's your imbalance. So there's 2. There's your down candle. That's 3. There's your imbalance. That's 4. That's 4 fucking ways to enter the market on one setup. This little whoop-de-whoop right here. That is 4 different ways to enter the market on this. You don't see a break of structure here. I mean, I guess you could argue that maybe that's a break of structure, but I don't really consider the wicks. I'd rather consider the bodies. So all these people who, you know, like, look, I'm not trying to like talk shit, okay? There's a lot of people who post, you know, their trading models on Twitter. I've seen a lot of them. And a lot of them do have breaks of structure. But they are not required. If you ever get into an argument with someone like, oh, you need a break of structure, send them this fucking video. Send them the link to this video. Be like, no, you don't. No, you don't. Be like, we got this guy out here, you know, telling us that you don't need it. And I'm showing it to you. Okay? Look at this one as well. Look at this. You know this imbalance right here? On the 1 minute that we just marked up? Look. Look. That also is a 5-minute gap as well. Right there. You didn't even have to go down to the 1 minute. You didn't even have to. You could have waited for that gap to form, and on that next candle, you could have bought that gap. Stop at this low. Oh, shit. That's 5 ways to enter the market. I just gave you 5 ways to enter the market down here. Oh, man, John, you know, he just talks on Instagram. He just says some bullshit. You know, he's just talking out of his ass. You're right. You're right. I don't know what I'm talking about. I don't. I have no idea what I'm doing. I just get lucky. That's all. I just flip a coin. I just flip a coin every day. I have a quarter. It's my lucky quarter. I just flip heads or tails. Whatever it lands on, it's what we do. And yes, John, it will be. All the recordings are there. Even the recordings where I talked about Wells Fargo. They're all there. And of course, even the calls that I've made where I was wrong, they're in there too. Matter of fact, let me give you an update for Friday. Remember Friday we took that bullshit ass trade? And remember I told you? It was the NASDAQ, right? It was the NASDAQ. Oh, we're on the S&P. You silly goose. Look at this. On Friday, were we looking at a 1 minute chart? I don't even remember. Oh, yeah. It was this. So we were like forming a triangle, right? And then I told you we were just going to short it. But it wasn't a live trade, right? And what did I tell you? I said, number 1, I said, don't fucking take this on a live account. But number 2, I said, what disqualifies this being a short was the equal highs on S&P. Go watch the recording, right? When we go to S&P on Friday, what do you think you're going to see? Friday is here. What do you think you're going to see? I told you that last hour is probably going to provide opportunity, right? And I told you to watch out for those equal highs, didn't I? Again, fucking coin flip, bro. It was a coin flip. Heads, oh, it'll run to equal highs. Come on. So study this. Remember we talked about, now this was one of many scenarios, so I'm not going to take credit for this. But we talked about how the run on lows could be a reversal to get the run on the highs. Oh, that panned out. Yeah. When did it pan out? Last hour. And you know what? I don't know, man. This John guy, he's still, you know, I haven't really been watching him that long. And, you know, should I trust him? Should I trust him? Maybe he's just lucky. Maybe he's just lucky. Possibly. You're right. Maybe I just am. 50-50 every time. 50-50 every time. Now, admittedly, this was a couple minutes late, and I did record this. It wasn't the greatest recording ever, but could we have bought the new lows? Yes. Did I do that? No, I didn't. But what I did point out, matter of fact, this is on my, never mind, it's not public. If you're a member, go to the community tab. If you're a tier 1 or tier 2 member, go to the community tab. It's what I posted on Friday or Saturday. Whatever day it was, I posted this. Okay? I believe it was this mitigation right here. Okay? Look at that. Right there. Right there. Break of structure. Okay, that's fine. You don't always need it, but it's here. That's the only way to qualify a mitigation anyway, is you have to have a break of structure. Boom. Wicks into that right there. 2:03 p.m. Boom. Right there. Okay? So that's where I went long. Okay? Right there. A demo account. Okay? And then I tweeted just a minute later. Okay? I papered this one. I wanted to take it live, but I didn't. Okay? And then a minute or two later, that's when I tweeted. Like, okay, now we're going to run for that. Boom. Ran for that. Came back into the mitigation and then took off a second time. Now, I went break even from my entry, so it came back to get me out, but I got out the majority position at that new high at 41.86, which we talked about. You know what I mean? So that mitigation's an opportunity. I want to say that down candle. Price never got past that either. So depending on if you got filled or not, but that's an opportunity. This imbalance right there, that's also an opportunity. So again, is there only one way to take a trade? No. There's 3 opportunities in here, at least for me. There's at least 3. That's all I'm saying. So, you know, I'm giving you things to study here. I'm giving you a lot of things to study. So, hopefully you can appreciate that, because this shit is free. YouTube is free. You just have to show up. My Twitter is also free. But, you know, you're either going to pay attention or you're not. I mean, it doesn't bother me either way. But, you know, hopefully I can at least prevent you from taking bad trades. That's the goal, at least. I may not always get it right. Sometimes I am wrong. I get that. But, again, that is the goal. The goal is to hopefully prevent you from taking bad trades. And that's it. What's good, Electric? So anyway, if you guys got value out of today's presentation, drop a like. I greatly appreciate that. It lets me know that you're here. Lets me know that you're paying attention. That is also free. Now, if you would like to show your support for me and for the channel, you can purchase a membership today. Tier 1, I think, is $5 a month. Tier 2 is $10 a month. It's super cheap for a reason. I didn't want to make it super expensive. So that way you guys, again, if you feel the need to, if you want to give back and help, you know, be part of the community, be part, you know, get the sniper next to your name, have the emojis, and then also access to member-only videos coming soon. But member-only community posts, you get those right now, amongst other things that will be here in the future. So again, not a requirement. Not a requirement. You don't have to donate. You don't have to purchase a membership. But if you find it to be valuable and you want to be part of a community that I'm trying to grow together, you can do that. You can definitely do that. But just know in the future, we will have more membership only chats, and eventually we'll get to the point of membership only streams. So then, you know, this will be gone and only paying members will be here. And I do that not to make a shit ton of money, because if I wanted to do that, I would charge more. I would charge more. But I do that so that way people pay attention. Because shit that is free, people don't pay attention to. But when you pay for it, you pay attention. And that's what I would rather have. I would rather have 10 people on a stream paying attention than to have 100 people on just bullshit. Because when people come on here and they just watch and, you know, they don't participate, they're just kind of here and don't really do anything. That to me, it's like, I feel like I'm wasting my time, you know? I feel like I'm wasting my time, and that's what I don't want to do. So, I mean, that's like literally the bare minimum entry, $5 and $10 a month. Dude, I spent fucking $29 yesterday on tacos. Now, granted, I had a frozen sangria swirl to go with it. I'm just saying, you know, it's like, dude, for the price of half of lunch, you could be here and have access to all these cool perks. So I'm just saying. Tier 1 would enable me to view all of it. So, interesting question, John. When I go to make a stream, like I could change it right now if I wanted to. If I go to make a community post, I have different options. I can make it public for everyone. I can make it tier 1 and higher, or I can make it tier 2 and higher. So some of the posts are tier 1 plus, some of the posts are tier 2 plus. So I always have that option. But part of me almost feels like I should have just made one membership instead of 2. But I can't go back and change it. I can always add more memberships, but I don't want to do all that. I'll keep it how it is for now. But I think the better choice is to eventually get to only one, like just have one. So there is that. All right. Well, as per usual, the indices have not done a whole lot here in this afternoon. If it was me, I'd probably look for a lower Dow, but I'm not going to trade that, only because the other indices, I mean, they don't look bearish. It doesn't really look bullish either, but it's hard to say. It's hard to say. As for the euro, I haven't looked at it. What level is that? Oh, that's an old low. Never mind. Oof. So the dollar took the high from Friday, a couple hours ago. But the euro has not taken Friday's low. So we have a higher dollar and a higher euro. Interesting. Interesting. We also have a slightly higher Australian dollar and a slightly lower New Zealand dollar. So what the fuck? What's up with that? You know what? If anything, I would probably be bearish on Australian dollar. We came up, filled that imbalance to the T, and it just seems like this low, 65, 64 could be on the table in the next couple of days for the Australian dollar. New Zealand doesn't have the same price on the, or the same like imbalance and everything, but it does have this up candle here, which is currently being respected. So possibly bearish Aussie and bearish Kiwi. Both the euro and British pound are trading higher. Let me just see one thing real quick. Yeah, I think the dollar's at a very interesting place. And I think it's hard to tell, at least for me personally, for the euro and for British pound. If I had to say, I think that low should be taken. If you know what, I don't even want to do fucking intermarket with dollar and indices, because I mean they could both trade higher together, so I'm not gonna do anything with that. Yeah, I'd look for a lower Dow here, but at the same time, it's really hard to frame a 1 to 3 when price is this close to that low. And I think we have some equal highs there too, right here. So I mean, I think the possibility exists that we could run up, sweep the highs, like these equal highs, and then dump lower for this low, and maybe even the low from 9:06 a.m. this morning. But just beware. That would be a super short-term idea, because I'm still bullish on the higher time frame. So counter trend trade. So to me, if I were to take something like that, it would be reduced risk. Counter trend to me is reduced risk. Know what I'm saying? So I may want to rally up, and I could see us again taking these short-term equal highs, dig into this imbalance, and then trade lower. But counter trend, and we're in the middle of a range at the current moment. So from here, it could just run lower, or it could trade higher. And again, that's why my accuracy drops off when we get into the middle of ranges. It's just hard. It's hard to be consistently accurate in the middle of ranges. Can we call trades? Oh, yeah, of course. But consistently when price is at 50%, it's way harder. Way harder. Especially when the indices are slightly out of sync as well. Because like the S&P is not going lower, and the NASDAQ hasn't really done much. So we're a little, I'd say we're a little mixed at the moment with today's intraday price action. NASDAQ did all that weird shit, all this, lower lows and higher highs. So to me, it's like, probably not the greatest day. I think the opportunities were like with what Andreas traded today, that mitigation on the Dow. This idea here on the S&P, I mean, that would have netted you a lot in terms of points on the upside. Like that, to me, I'd be done for the day and not worry about the rest of it, you know? So it's 1 o'clock. We're coming up on a little bit less than 2 hours left in a day. So I have no idea. But if I had to press buttons, like absolutely had to, like if we were at a trading floor and they were like, you gotta enter something, I'd go, okay, fuck it, I'll short Dow. That to me is what I would go with. I would short it here with an expectation lower, but if it went higher, I'd short above those highs as well to go lower. Like that would be what I would do if I had to absolutely press buttons. So again, not trade advice. None of it is ever trade advice. I'm not a financial advisor. Always make sure to read the risk disclaimers. That's why I have it rolling up at the top. Okay. So keep that in the back of your mind. But I'll go ahead and cut it here. I mean, we could spend more time together, but I've given you the message. I gave you dozens of ways, not dozens, but I gave you at least 5-6 ways of entering a trade. You know what I mean? Multi-time frame analysis, maybe 5-minute ideas, 1-minute entries. I taught you that. I mean, I feel like it was productive for the hour and 11 minutes that we've been here. So I think that'll be a wrap for today. Did you guys grab some value today? Did you get some value today? Let me know in the chat. You've already liked the video, so I can't make you do that again. But if you got value, let me know. I would appreciate it. I may or may not screenshot it and put it on Instagram. Fair warning. Fair fucking warning. But look at that. We got some, look at all those silver snipers in the chat. That's blessed, man. That is blessed. And I cannot wait for the day we have gold snipers. Remember, that's 1 year. That's 1 year. But look, it's even on your screen. You see the one next to my name? Right here? How do I point to it? At the bottom, that is the 1 year one. It's gold and it looks fucking awesome. And I cannot wait for you guys to have that. I don't even know what I'm going to do. We'll probably do like some type of crazy ass giveaway. We got like 11 more months, but we'll have between now and then to figure it out. To figure out what we're going to do for that. But it's going to be really, really cool. And I'm excited. And I'm excited. Yeah, Allie, I'm going to get off of here. I'm probably going to finish the last few pages of this book. I'll come back to the charts the last hour. So the last 60 minutes, I'll try and look for something. But if we don't have equal highs or equal lows or, you know, something to reach for, then I'm not going to do anything and just pick up another book. I have so many unread books that it's ridiculous. Like, if y'all ever came to my house and I showed you my library and I'm like, oh yeah, like, this is the unread pile. You'd be like, what the fuck? You'd be like, why are you buying more, bro? I got a problem, okay? I got a problem. I'm not afraid to admit that. I got a problem. All right, what I'm just watching for, oh, the Dow doesn't have it, so it's kind of gross. What I'm watching to see is this imbalance here is respected, and then this up candle here is being respected. I'm just watching. I'm not trading this. I'm just watching it. I want to see if we trade below this low. That right there. 96. So I just want to see. I just want to see if that order flow pans out. That's all. All right, we'll give this like maybe 10 minutes. I just want to see if this pans out. Headed to the gym and then going to finish my book too. We've had a great opportunity today. Tomorrow's a new day. I agree. Buy more books while I have a pile of unread. Nikki does the same thing. Yeah, I agree. I agree. We have an issue. We have an issue. But you know what? Publishers love us though. They love us because we keep buying their shit. Oh, thank you, Naruto. Appreciate your comment. Appreciate your comment. Thank you. Thank you. So we'll give it until 1:20. So we'll be here 5 more minutes unless that low gets taken. Oh, there's 96. Can we get below it? Can we get below it though? Can we get 95? Man, I keep yawning. Dude, I don't know why. Dude, I slept like a baby. I had a bang energy right before we hopped on. How the fuck am I still yawning, dude? I don't understand that. Dude, we keep like tagging 96. Do you see that? Like we keep hitting 96. It's like 96, 96, 96. You know, like why is it doing that? It should push through it. Oh, there's 95.75. So there's like one tick below it. I want to see if we get 95. 95. 95 and a half. Oh, we may even get 94 and a half, maybe. So I'll be here for another 3 minutes, and then I'll tell you why I wanted to see this. And then we'll hop off. Sorry, I wanted to hop off, and then I finessed you guys, and we ended up staying. We ended up staying, sorry. Look, all these sessions are impromptu, man. I'm telling you, they're all impromptu. So it's not like I have shit scheduled. Not all the time, at least. Willis says, "How dare you bless us with more value?" Well, I was hoping this sinks down to 95 so I could tell you why. Real quick before I'll give you another lesson. I mean, if you guys want. I mean, look, if 5 ways to enter a trade wasn't enough, if you want more, I can give you more. You can just tell me, do you want more or do you want less? Let's ask the community with a poll. Do you want more or do you want less? Let's ask the community. So, give me a second. For those of you that follow the alerts that we've been doing, we can put an alert down at this low as well, because we're gonna hop off. Like, no bullshit, we're gonna hop off here in just a couple minutes. Like that's I'm not capping there. We're gonna get the fuck off here. Put an alert at that low, 34,225 for the Dow, or if you have like CFDs, whatever that low from this morning was, put an alert there. Okay. The Nas, we're not gonna look at that. We're gonna stay here for just a minute. You know what? We may even get the 94s. I'd go as far as saying that. These are probably my last words before I become a member. Before you lock the chat again. Well, I'm not gonna lock the chat today, because on Instagram I said today would be open for the public. I mean, the streams is always open for the public. It's just the chat sometimes is going to be membership only. Look, if you pay for perks, you're going to get fucking perks. Not perks, but you're going to get benefits on the channel. Okay? I'm sure Willow could appreciate that joke. So we went back to 95 and a half. No judgment, though. No judgment, Willow. Let's see if we get 94. I really want 94. All right, but let me tell you why. See, Willow gets it. All right. So let me tell you why. Again, it's the coin flip, bro. It's the fucking coin flip, right? Okay. This might be a hard concept for some people to get. I taught this many, many years ago, but I will explain it here one time, and then that'll be it. So watch this. If we happen to be bearish on the Dow Jones, okay? There's a slight gap right there too. Not that I would trust it, but I'm just watching it. So if we happen to be bearish on the Dow, okay, not that I think this is high probability, but the closer we get to this low, the more I think we're going to grab that, okay? We don't have to. Possibility exists. We can still come up and sweep those highs. I get it, okay? But the reason that I am watching this and pointing this out is because we have 1 o'clock, the opening of the hour. We trade higher. We drop down. But look what we dropped down, though. Okay, before all this other stuff. Look what we have here. As always, guys, when you mark up your charts, you don't have to do all these colors and shit. But look, analyze that. Is it efficient or is it inefficient? It's inefficient. Okay, there's a gap right here. And there's an imbalance right here. Okay, you have a lack of wick right there too, but I'd be more concerned with the imbalance, okay? So you have that. So the market, it comes up, actually trades into that lack of wick right there too at 4,200 even. Price trades off of it, back into it, respects it still, drops down, okay? And then what do we mark up? Not hindsight. We marked this up as it was happening, right? What did this candle do at 113? It came up. In bearish markets, up candles should be respected, right? Oh. Another way to enter a trade, okay? It's just the inverse of what I told you earlier. In bullish markets, down candles should be respected. In bearish markets, up candles should be respected. Boom. So study that. What exactly are you studying? Okay. I will point this out to you. Order flow, okay? Order flow. Price is bearish. We've been trading lower, right? Imbalance respected. Price trades down. And then into that up candle. Gunning for 41.96. Now, I wanted 95 or 94. The only reason for that is because, again, if the Dow will continue lower, I don't know if it will. This thing could trade higher, okay? But if it does come down to take this low, that would send the S&P with it, okay? And that's it. There's nothing more fancier than that. Now, obviously, if we were trading this, which we're not, but if we did, the ideal entry would have been the imbalance. And this low here, even one tick, is a partial. Because now think about it. If you had shorted this up candle here at 41.98 and a quarter, or maybe you took a market order and got 41.98. I mean, it's only at 96 and a half. It's only fucking 2 points. You know, I mean, this whole range isn't that much. But it's still the study of price action, though. Put an alert at 95 and put an alert at 94. Okay? I'll put an alert there for you at 94. I'll put that there. Okay? Well, 94 and a half is probably better. Now, the only reason for that is because when I was zooming out, this is what I was looking for. An imbalance below an old low. Oh, shit. The same shit I showed you earlier. The same shit I showed you earlier, right? That idea of what? Buying below an old low, right? But where? At an imbalance. Oh, but you can use that as fucking targets as well. Yes. Yes, sir. Yes, sir. The more you know, man. There's that 95 level. Come on, man. Look, we didn't take this. We didn't trade this. I didn't trade it. But we watched it. We watched live price, though. Coin flip. Coin flip, bro. We're just lucky every single time. We're just lucky. That's all. We just have an infinite amount of it. An infinite amount of luck here on the YouTube channel. So hopefully you guys can appreciate that. That's what I'm gonna leave you with. Be blessed. Have an amazing rest of your day. We'll be here on Tuesday. We'll be here tomorrow at I think, what do we say, 2 p.m. Eastern. Okay, 2 p.m. Eastern. We'll be here. Y'all be blessed and have an amazing rest of your day.